Hello guys, it's another fascinating session of our financial literacy again. So today we are just going to touch a bit on one particular thing which I think most people don't really talk about. We are always on the returns, and we forget to talk about the losses too. So in our previous submissions, we made mention that stock investment is a long-term investment. So it's not something you do, you know, in a very short period of time and expect a huge returns from it. It takes years. In fact, it takes patience, consistency, resilience, and compounding on your investment before you can earn hugely. So what do I mean by compounding? Compounding is just the it's like a snowball effect on your investment. So you earn interest on your principal and interest on the interest you are getting. So you earn interest on the original amount you invested and the accumulated interest. So if you can recall in our previous submissions, I made mention that stock prices are stochastic in nature. That is, they are not fixed, they are not static, they vary. Yes, so they are random. So if you are someone who panics a lot when you see that, oh, the stocks in your portfolio, the prices are going down, and like you are triggered emotionally to go and sell off quickly, like then the stock or the equity market is not for you. That's not a place for you to be. You got to find a different uh, type of investment to engage yourself in. So it takes patience, you know, to actually earn hugely at the end of the day. There are times your portfolio will be going down due to a reduction in prices of your shares. There are times too your portfolio will be booming due to an increase in the prices of your shares. So either way, you got to keep moving. That's how that's the uncertainty and the risk nature of the equity market. Remember, it is a medium to high risk investment. So it is what it is. You got to prepare for anything at all. So this is MTN Ghana. So as you can see, the upward and downward movement of the stock price is an integral part of the equity market. There is no way you can find your way through it. You get it. You live with it every day in, day out. So as at January 5th to 7th, the share price was 4 CD 20 pesos. But as at January 14th, the stock price has appreciated by 0.03 pesos, moving the price from 4 CD 20 pesos to 4 CD 23 pesos. So if you do the math, you really appreciate the significance of the price movement, which I'll definitely do shortly for you to see. Again, taking Carbon PLC into consideration, I want you to fix your eyes onto the graph and concentrate on the price movement. So as at December 31st, 2025, the price per share was 0.65 pesos, and it declined by 0.01 to 0.64 as at January 4th, 2026. And it didn't stop there, it declines further to 0.61 as at 13th January and 14th January. So you can see the significant movement. So from 0.65 to 0.61. So that is a 0.04 reduction in the price, which will definitely have a ripple effect on your total holdings. So your total holdings will definitely decline. When it happens this way and you are not someone who understands the equity market and appreciate the fact that prices do come down and go up at a point in time, then you'll be triggered to go and sell off the shares prematurely. As I'm talking to you now, Carbon closes today's market with an appreciation in price by 0.02. So moving the price from previously 0.60 or 0.61 to 0.62 pesos. So as I said earlier, in the equity market, patience is the ultimate goal. When you are patient, you earn hugely. So this is a clear practical illustration of how stock prices affect your returns. So when there is an appreciation in stock price and when there is a depreciation in the price of a stock, how does it affect your returns and your total holdings? So you have company A and company B, MTN Ghana and Carbon. So the first one is talking about an appreciation in your holding due to an increase in price of MTN shares. So which was previously at 4.20 pesos and then moving from 4.20 pesos to 4.23. So now multiplying the quantity, which is the 30k shares, by the previous price and the current price, you see that you get a difference of 900 Ghana cedis in 7 days. In 7 days, you've gotten a return of 900 Ghana cedis. Applying the same analogy to that of the car bank, the price was 0.64 as at 5th January 2026, but declines to 0.61 as at 7th January 2026. In just 2 days, there was a reduction of 0.03 pesos. So now, if you have 200,000 shares of car bank, you multiply that by the previous high price and now the current low price. So when you strike the difference, you get 6,000, 6k. So your holding has depreciated or reduced by 6k, which is 6,000 Ghana cedi in just 2 days. So you understand the game now. So if you are someone who who can't take risks, if you are someone who panics, like your BP will go high, you get it. So the equity market is not for everyone. It's not for everyone. If you are not that strong emotionally and mentally, don't just venture into stocks. In as much as you can earn high, you can also lose high. So to beginners who wants to explore the equity market, I think this will do a lot of good. It will, sharpen your mind and you get to understand what really goes on in the market. And guys, we are in this together. Kindly share, kindly comment and like. Please, if you have any question, any concern or recommendation, you can drop it at the comment section so that we'll address it together. I think we are on course and gradually we are building that ideal future together. Have a lovely day.